Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.Exchange. And last week, it was a fantastic rally, both Nifty as well as Bank Nifty. In fact, Bank Nifty catched up with Nifty. And why the rally was fantastic? Number one, the Nifty has never rallied 1,000 points in 2 weeks, in the recent past at least. If my memory is right, so it has never shot up like that. And number two, Nifty has never shot up like that against the global trend. The global trend was not good. Europe markets kept on falling. Asian markets were not really very good. And not only the global cues, look at every other parameter. Crude prices keep going higher, not good for India. Indian rupee keep depreciating, not good for India. US dollar index is rising. US bond yield is rising. Whichever parameter you look, and everything was going against India, but Indian markets kept on moving higher and 1,000 point rally in 10 days. So, what can be the reason? Even the FIIs were selling. So, there is only one reason you can attribute. Number one, people probably have shorted heavily. Number two, the huge amount of mutual fund money. So that is a significant factor since 2020. And during the coronavirus period, so the people have realized importance of financial saving. Earlier people, save in physical assets like real estate. Now the real estate cannot be liquidated as and when you need, but equity markets, mutual funds can be liquidated immediately. Huge amount of money is flowing into mutual funds. In fact, last month it was the highest SIP money coming into mutual funds. So that could be one reason. So last Friday, the US markets fell significantly. Nasdaq 100, it has fallen like nearly 400, 450 points from intraday high to low. That's because, no matter what they talk, they are little bit worried about Fed chairman's speech. So even if they do not raise the rates, but they will talk very hawkishly. So they are just trying to factoring that Fed meeting into the prices. So that's why on Friday the US markets fell. GIFT Nifty was indicating about 80, 90 point down. So on Monday we are likely to open about 80, 90 point lower unless there is some improvement in Asian markets. So if Asian markets feel that what happened on Friday in US markets is just, jitterness due to Fed meeting, if Asian markets open positive or slightly negative, then there may be some improvement here. So otherwise, in all likelihood, we are likely to open lower on Monday. So coming week is very, very important for many reasons. So number one, the special session of Parliament will begin tomorrow. Stated agenda, there is nothing related to stock market. So the stated agendas are, stock market neutral, we would say. Nothing good for stock market, nothing bad for stock market. But however, there's some intense speculation that so they may bring suddenly some new agenda. So if anything is that the people are expecting, so for at least 1 week from Monday to Friday, the markets will be having some kind of a doubt. So the markets will become clear after market are very firm that there is no new agenda. So this is one big uncertainty. Second one, Tuesday is a public holiday. It is a local holiday. It is not an international holiday. So one has to be a bit careful where as and when there is a local holiday. So the traders will not like to carry more positions. And because, 2 days of global cues will have to be factored in when the markets open on Wednesday. If it is an international holiday, there's nothing to worry. But local holiday is an Indian holiday, not international holiday. One has to be a little bit careful. So some jitterness may be there. If the market started the downtrend, there can be heavy shorting towards the end of the day on Monday. So that's the second one. Third one is no need to say it is a Fed meeting. So although there are some news that stated, like there was a consensus among all the governors that there should be no further rate hike in the coming meeting. That's why I said, this Fed meeting may be a non-event. People are not expecting any rate hike, but people will be focusing on what the Fed chairman is going to speak. So if he choose to speak hawkishly, already there are some news channels reporting that, so Fed is going to go for a hawkish pause. So it will be the pause, but it will be an hawkish pause. So markets tend to be jittery, but the US markets are like that. So I was just checking the chart. Last 2 years, Dow has given zero return. Last 2 years, S&P 500 also gave zero return. So these people, like it goes up, comes down, then goes down, then comes up. Over a period of 2 years, they have not gone anywhere. I think there may be some sustainable rally as and when there are some signs of interest rate coming down in US. So right now, everybody's worried. They'll be very happy if the interest rate is not rising. So already I heard from some of my friends in US. So they are paying more than 8% interest to the bank for their housing loan. So just imagine how to survive if you pay 8% plus in a US dollar term. So that is the kind of problem the US real estate market is facing now. So looking at the open interest, the 20,000 put option, so seems to be having a good open interest, and 20,500 call is having a high open interest. So this is a truncated week. So we have only 3 more trading sessions. Monday, Tuesday is a holiday, and Wednesday and Thursday. So because Tuesday is a holiday, the Fin Nifty expiry is going to happen tomorrow. But because the markets are so bullish, the option premiums are very, very pathetic. Like 200, 300 point down, and option premiums are trading 3 rupees, 4 rupees. Like if one minor black swan event, a small black swan event, and one gap down of 400, 500 point. So these people will lose, 10 times, 20 times. So that is why, now the best trade is to keep away from very, very short-term trade. So you may remember on Friday, I suggested one trade. Okay, so buy a 19,000 call, sell 23,000 call. And this kind of trades, so that may also come into trouble, but the probability of that coming into trouble is very, very low. And even if that comes into trouble, that may come into trouble maybe after 3 months or 4 months. So it won't come into trouble in a day or two. So since the premiums are too low, it's better to keep away from market from trading in the very, very short term. So, however, looking at the open interest and going by Mr. P.R. Sundar's new box theory, so everything is pointing to us the range of 20,000 to 20,500. So, as I've been saying, so for short term, this may be the range, and monthly expiry, which will have another 4 trading session. So that we will discuss next week. Is if everything goes well, and bulls will try to defend 20,000. And you remember, Bank Nifty is yet to touch all-time high. So I thought, the markets will correct only after Bank Nifty touching the all-time high. Let us see. We have not been following the global cues for the last 10 days. So there is no necessity that we will fall. Even without global cues falling, without global markets falling, so there's a possibility we might fall. So anyway, I will become bearish for the very short term only if 20,000 is broken on the downside. So let us see what is going to happen. Hope you enjoyed listening to this audio. Thank you for listening.